intraday traders. It is Sunday, the 26th of September. And this is for the week commencing the 27th, so from tomorrow, from Monday. And just having a look at the high impact news that's scheduled for this upcoming week, there isn't anything that really screams danger to me here. I'm not seeing anything that I would expect to be out of the ordinary, where the market will perhaps be shocked or surprised. I mean, obviously that can still happen, but there doesn't appear to be anything that's scheduled. And so I think based off this, let's just move right to the charts and have a look at what's going on there. So having a look at the VIX, one of the things I want to highlight is the failure on the monthly candles, just a repeated failure. So actually you can see quite a lot over the last several years. It's a lot more obvious recently, just really any attempts to kind of head above or kind of see almost like a normal natural increase in volatility just doesn't seem to be able to hold itself. We had a really big kind of collapse back to below these lower levels. We had a big breakout, which was a fantastic indication of, to me at least, potential shake-up in the disruption in the markets, which then should provide us with opportunities. Look, obviously a massive disruption could be a bit of a disaster, but just an increase above these levels would provide most traders with just more movement in the markets and therefore more money making opportunities. So we had this sort of push up and an immediate kind of fall back to this, a failure to do that. So it's not to say that it can't really happen again, but it kind of implies that this week I wouldn't really expect anything to happen. The market isn't expecting anything to happen. It's going back into a coma. And so we'll just have to see how the charts look separate to this, but there again, this kind of just implies the market is just, as I said, going back to sleep on that note. So looking at the US dollar index, and what I spoke about last week was just this overall push to the upside. We have broken, we are technically in an uptrend, but we also range-like behavior. So in other words, it's bullish, but range like bullish. And really what I want to see finishing up on last week's moves to the upside is just see if we can continue to push through, ultimately to head up towards 95. Look, for me, in the longer run, I would have loved to have seen the dollar weaken for a bit, but it does appear as though what it wants to do essentially now is kind of push up towards 95. And I want to see if we can get through this band of resistance this week. It's pulled back, produced a nice little bullish candle here, off a previous, off 93 here. I'll be looking this week to see if we can not only break the high of that, but continue to break past these highs, potentially get out of this band of resistance. If we do that, then my expectation is it would start to move up a little bit more towards 94, up towards 95. All right, so that's really what's on my sort of cards this week, is to see if we could see that reversal if it's able to do it. But there's no doubt there is a little bit of resistance over there. Moving on to the euro dollar here. Euro dollar here, of course, is still within this range. I spoke about this last week as well. Whether we would get to the bottom of the range and then break out, it certainly seems keen on doing that. This monthly candle currently looking more bearish than bullish. And we can see price now at the bottom of this range, but it is within a range. There's no doubt about that. It's within a range of the monthly and within a weekly range, and the daily is a bit all over the place. But I'd like to see if we can continue down. So break of these lows, even better would be a break of these lows here to see that. Now, MACD is a little bit more bearish and RSI is bearish. So it is leaning, as I said, it's kind of 55 to the downside, 45 to the upside. So let's see if that continues that way. It leans towards basically a stronger US dollar. But make no mistake, the markets are currently stuck within a range. And so it just makes until we get out of that range, it just makes it more difficult to predict. But looking at, for example, at sterling against US dollar, we've got these lower highs coming into this flat level. That implies a weaker pound against the US dollar. Current candle is sort of incomplete. And again, we've got that pullback to a bearish candle within this range, certainly down towards this level. This may well then be leading towards a breakout to the downside this week. So let's see how that goes. So initially, at least, kind of talking about the idea of a stronger US dollar, at least maybe just till price gets to these levels, and then we'll see if it's strong enough to actually break through on that. Moving on, Australian dollar against US dollar, same thing. It's pulled back in, just no clear direction here at all. You can see we had a nice downtrend here. We broke that, and now the market is trying to decide what it's going to do next. All of this just means, huge caution with regards to intraday trading. The best, most professional intraday traders will understand this. They'll take each day on the face of it and not really necessarily take anything about the bigger picture into account. Alternatively, they'll just not get involved with it at all, because there is no kind of, the market itself is going to be all over the place. And this is part of the reason why newer traders, certainly maybe within their first couple of years, should potentially, just stay away from these markets entirely. Kiwi dollar against the US dollar has produced this swing low here, but hasn't followed through. It's fallen back into that. Again, it's struggling with resistance at this level. I was looking for a break outside of this and a continuation. It's just failed at that area. So overall, no clarity on those markets. Dollar yen, which I always argue is junk, because it has a longer term kind of just, it doesn't really know where it wants to go. It stays within that range. It has looked nice and bullish. It's broken through this kind of complete indecision. Now pushed and closed a little bit higher, but it is still within a larger range here. So again, but this supports that idea here of a stronger US dollar. At the very least, contributes to that. Now starting to look a little bit more bullish on the MACD. All right, dollar Swissy. Pullback. This is going to be interesting for me. I think I want to see, we have produced a bullish candle. We then failed to follow through on that. I'd like to see if this level can still hold. Will we produce bullish candles and push a little bit higher? That would make sense if we do see in the initial early part of this week, we start to see the market push a little bit higher there. We've got a high low, high on this. So this is leaning a little bit more bullish as well. That is bullish for the US dollar. We've got dollar CADJPY. I think it's safe to remove this. We don't need that anymore. We've pulled back into this area. There's definitely some resistance up here. The question is, although last week's candle was a little bit more bearish, generally, again, it's more indecision stuck within this range. Just fantastic stuff. And we've got, again, you can see that attempt to get up, push down, attempt to get up, push down, indecision candles. So there's a battle going on here between a stronger dollar or a weaker dollar and a stronger CAD or a weaker CAD. They both have their individual battles going on there. So it'd be interesting to me to see if we get a bullish candle here starting to break a little bit higher if we see that across the board. But what I'm seeing here, and again, just leans that a little bit more towards a stronger US dollar, at least if nothing else for the first part of the week. We'll see if it manages to break through until it gets back to those levels, and then we'll see if it manages to break through those. All right, so now on to the currency pairs of interest, starting off with some of the yen crosses. So here's really the gist of the idea with several of these. They all have formed some quite strong double bottoms. They look a lot more bullish on the weekly. And so I'm going to be looking for moves up to these previous highs and ideally looking to break those highs, which might also happen on the daily, looking for that. The monthlies are in an uptrend and are starting to look quite nice and bullish here. And therefore, continuation, to the upside here is the basis of all of these yen crosses here. GBP yen has found some good strong support. Can it get above resistance at 152 and climb higher? That weekly looks nice and bullish. It's also range bound. Why? Because it broke that low. We have lower highs coming in here. We have mixed lows here. So it's essentially this continuation to the upside. We'll see how that goes. CAD yen pushing back up. I would like to see it break these lows. That looks really bullish. That's a really strong bullish move. And so I think it's fair to say it's going to attempt and certainly likely break that through that level and continue up. And that's starting to look nice and bullish. Swissy yen as well, having come back in, did not produce a bearish reaction here and or a bearish signal, and is certainly not looking like it's going to continue down. That is looking more and more bullish on a monthly basis as it unfolds. This is in a downtrend, but that's a bullish engulfing candle. If we just have a look close, both the low and the high plus the body were really solidly strong. The bulls winning that particular move, and therefore again this implies that the market would like to go back up higher. Obviously it doesn't want to go any lower, so it's brought it back up here. The question is, does it want to go up a lot higher? And so we'll see how that goes. So that's all the yen crosses for me. I'm quite interested in. EURJPY, so they've got the opposite kind of impact here. We've started to break the lows here. They're looking very bearish. So it's weekly candle, again, that's a bearish engulfing, looking it's engulfed for the 4 previous weeks and closed below all of them. I don't know if it closed below that one there, but it's certainly closed below these two, looking like it wants to head low. And I was looking at this thinking, how much does that look like a bat hanging from the inside of a cave, just hanging off the ceiling? But yes, it is nice and bearish, and I'd like to see if that wants to continue down. I would say probably down towards these lows over here, those market structures. GBPJPY, same thing. It's got a level of support that I'm just going to mark in here now. This makes a lot of sense to me. Question is kind of work its way through that or stay below that, but any breaks through that and pullbacks to find resistance here to continue to the downside. That's a massively nice, great example again of a bearish engulfing candle, and again also very similar look to EURJPY. AUDCAD, downtrend on the daily, back in towards these lows. I expect there will be a bounce off here, and I will expect there to be a bounce off here. When the markets are moving, when there's a lot more volatility and the markets are trending really nicely, sort of small or minor support resistance levels are not really a concern. But when the market is very much undecided about where it wants to go, it pauses at almost every single level it can find. It's ridiculous. And so I expect that to be the case. That monthly look a little bit bearish, and there's a monthly level that's a little bit further down towards 0.91. And I would expect the market to attempt to go lower. Just be cautious around any of these levels. And then finally on Aussie Kiwi. So this one is really struggling to break through this level of resistance here on the daily upon sort of close and kind of paying closer attention there, but a lot more buying pressure from underneath. And this finishing up with a weekly bullish candle, which is actually an inside bullish candle. And so therefore, I would look to see if there's a break and this becomes a swing low. If that is the case, it is my expectation the market will attempt to go up towards 1.05, and therefore there might be some short-term intraday buying opportunities to the upside. So like I haven't spoken about swing trading opportunities in currencies for a while. It's because there just really haven't been any. I mean, even the ones that have shown up have basically triggered and gone one-to-one and turned around and reversed. So trends are just not sustainable at the moment. A large amount of that is correlated or supported by the VIX as well. Okay, and that's it for me in terms of currencies of interest. Let's go ahead and have a look at precious metals and have a look at gold. Okay, so when it comes to gold, it's still on a downtrend on the daily, still breaking these lows. That is a bit of a bearish indecision candle, managed to kind of stay above that or close to that 1750 level. That monthly starting to disregard this kind of, I want to say hanging man indecision, but this is effectively an indecision candle. And although it was relatively bullish, it just means there's lots of buyers below here. There aren't enough buyers above here to carry it to continue on. So this really hasn't changed my opinion on gold at the moment. It is looking, again, it's looking slightly, it looks more bearish than bullish. I wanted to see if we got a really good recovery off this level. We did, and then it just immediately came back into this level, produced a bearish candle, and then continued down and broke further lows. So this is still leaning more bearish than bullish, and therefore this week I will look at it and see if it trends well. But I would look again. I think they're going to be buyers below here, and therefore there's a possibility it's going to push it back up. But at the same time, I won't. There is a possibility it's going to push a little bit lower. I'm certainly not expecting a fantastic bull recovery on this just yet. I'm more cautious to see if it's going to try and go lower and then get pushed back up, or if it's going to attempt and fail. It's just that little bit more bearish than bullish. And the problem with that is it introduces ranging and it's higher risk. Silver as well, coming back down to test this 22 level again, and actually this is looking very much like it wants to reject the level and try and go back up here to 23. We'll see. I mean, it's done it in the past. It's managed to reject those levels. It's still within that larger range over there. This is a bit of an indecision candle, so a break above that could be significant. But all that really does is support the idea that this doesn't know where it wants to go. It's kind of, it actually hit it, ultimately finished lower for the week, or at least pulled back and came back down. And this coming week, if it pushes back up, all that is just continued range-like behavior. So not really on my list of fantastic things to look forward to in terms of trading opportunities. On to crude oil. So they continued with their bullishness. That was really nice. I wanted to see if we would break these previous highs we have. So my expectation now is this week is to see it continue up to 75. That weekly candle looking relatively nice and bullish. Price action looking nice and bullish. That monthly is now a confirmed swing low. And therefore, if it could break beyond 75, it's reasonable for me, I think, to assume that this is going to continue to go higher. But this is still its existing or current resistance level, and I have to respect that. But I like the look of this. So that stays on my watch list. I want to see, again, is how well it manages to break up and go beyond, above and beyond. But look at this Brent crude UK oil managing to break through and continue on and finish fully nice bullish candle. This was really cool, kind of break through, test the level and continue up. This is a very, very nice geometric structure. And although I didn't trade it on the daily, I did trade it intraday, but actually that was, to some degree, you could argue that that would be a really nice straightforward break and a retest of that level, bullish level. Moving on to the global indices, let's have a look at these. So last week I spoke about all kinds of, it was just annoying to me as well, all kinds of different scenarios. It was pretty clear the market was going to have a bit of a correction. It ultimately did, and one of the things I mentioned was the possibility that it would be able to rebound. So it would actually do both. It would rebound and then recover, and actually this isn't really about me being right or wrong. I can be wrong plenty of times. This is just about that this was the behavior of it. So what does it mean to me? It means that, again, we still have lots and lots of buyers here, and the possibility that we could be heading into a bigger correction does take time. I think that was something I wanted to get across, was that that isn't something that happens in a week. It could happen over sort of 18 months. So this is kind of where we're at the moment. This is a bullish recovery, meaning there's still lots of buyers at this point, and at some point in our future there just won't be buyers there. It'll head down, but for now the buyers are still there. And so this week what they're really going to be looking to do is to see if they can push high, get back up to these old highs. And so I'm going to treat it as such. I'm going to give it the benefit of the doubt to see if it can push higher, but I really want to see how it's going to handle this. Okay, so what I'm going to do here is just put in this level here of resistance at this point and see how it is if we can get to that and push beyond it. We haven't really have it, in my opinion, a decent enough connection here. So on the other hand, should the market just fail immediately and actually fail to break the high and start breaking the low, Again, that supports the overall picture that we are leaning towards a more longer-term correction that's going to unfold over several months. So on a weekly basis, I'm really going to be determining how dangerous it is, whether it's, just stay away from it, whether I'm leaning slightly bullish or whether I'm leaning more bearish. And this week, I'm leaning to the upside in its attempts to climb higher because of that recovery, unless the following thing happens. In other words, I get more bullish the second we break the high of last week. But if we just drop straight back down to the lows, then I become more and more bearish. Okay, so that's what I'm looking for. As soon as we break the highs of the previous weekly candle, I'm back in for more moves to the upside. We still have not had a proper correction, but in the past we've had a bearish candle and then just recovered and carried on. And there's a lot of fundamental evidence to argue both, but certainly there's plenty to support the idea that, if there's continued stimulus and optimism, there's no reason why the market couldn't potentially keep going, even if we are currently within a bubble. So this is a really nice bullish setup. In isolation, this is perfect. This would be a very strong, healthy market, and therefore break above the high would be really reasonable to assume the market is going to head up towards these old highs. NASDAQ. Same thing, it is a bullish recovery. It's not, it didn't finish as strong as I was hoping for, but overall there's a relatively bullish recovery. So the question is it going to be able to break that high and push back up to these old highs? So initially that's what I'm looking for. I want to see a break above the high, and I want to see my initial targets will just be back up to these old highs. That's it. And I think that that's really where the safest, relatively speaking, the safest money-making opportunities will be. Failure to break the high and a move immediately back down towards the lows, initially maybe straight out the gate, maybe Monday. It could even happen. You have a silly thing again. Monday, Tuesday it drops down, and then Friday it closes back up. But all of that really does show is exhaustion. If the market keeps just like dropping and then trying to recover and then dropping and trying to recover, but not really managing to continue on, then that's obviously supporting more bearishness in coming weeks and just adds more volatility. So here we go, we produced a bit of a bullish engulfing candle, but we didn't get back up above that level of resistance. And again, we're still sideways moving here. This could ultimately lead to a breakout to the upside, so I'll keep an eye on that. FTSE. Look at the FTSE came back in, it's come up into this resistance area, produced a bearish candle, swing high, and this actually looks like this wants to continue down, but it might find some support a little bit down here. This level, that's a nice bullish engulfing weekly candle. That monthly looking a little bit more bullish. Not great, not a lot of clarity on that, so it's not a strong market anyway. This being interesting to me, the DAX actually dropped right down. It broke these lows here, finished up with a bullish candle, but that's not a great, I wouldn't consider that a sign of strength. That monthly candle not really looking that bullish just at this point in time, but it could finish bullish depending on how well we recover. So what are we looking for on, I think with both the FTSE and the DAX is looking to see a break up above, break these highs here initially. I'm leaning towards, if I'm going to be bullish, I'm looking towards the US markets. I'm going to probably stay away from the Euro markets. If I'm leaning towards bearish, then I'm going to be focusing on the weaker markets, which will be the Euro markets here. Okay, same thing here. So same analysis across FTSE, DAX, and stacks is that weakness as well. Sorry, FTSE, stocks, and DAX, as opposed to DAX and stacks. Okay, this really nice bullish swing low, solid bullish candle at this point, but it's back in at these old highs. So again, can this get past these old highs? And if the US manages to do it, they may very well, then it might very well manage to do that. And finishing off on the ASX 200, pull back into these levels here, old resistance, bearish candle here. Actually, this makes a lot of sense that there is a possibility this is going to head lower. We'll see. There was a push back up from these lows here, really solid correction down to these old highs. It has tapped that, and therefore actually a break high could do very well. That's not an especially bullish candle, but it is. I would give that a push back. I want to see a break above that before I would consider looking for buys up to these previous highs, and obviously cautious as I approach these levels around here. For example, that's 75.36, just where there's clearly going to be some selling at that point. And the question is, as I said before, are we at the beginning of a turnaround point that what we're going to see is fewer lower highs and more breaks of the lows over the coming period? We'll see how that goes. For me, ideally, just over the next 6 weeks, I'd love to see a correction down on some of these down to the lower highs, to the moving averages, let off some proper steam buying pressure, and then recover, and then have a good run through December, maybe January, February, March. I'd like to see that. But that's where my caution and my concerns are at this time. Okay, onto the equities of orders, equities of interest, what's wrong with me, and onto Royal Mail out of the UK. So let's pull back in, 500, nice little area there. It's back into a really good area to see if we can have a bit of a turn on. There's no doubt in my mind kind of if the market is still looking to shed some more weight, it's probably going to head a little bit lower. But I'm going to see if what happens is there's a bit of accumulation here, if this is getting ready to climb a little bit higher over the coming week. not seeing any immediate trading opportunities. This is an amazing recovery from Amex, just having pushed down and finished, and that's a bullish engulfing, really strong, almost closing right near the high. And that's a signal, obviously, for that whole week, and you can see that that was the tail end of that week. So interesting to me to see if that can continue, because again, the problem is going to be here is how does it, is it kind of maintain its highs beyond that, but certainly that's contributing to it. ARC at this point not showing any real signs of any change, managed still within that range, breaking below these lows, would see it heading back down towards 106. Not seeing much over it, certainly not signs of bullishness. So that is neutral to bearish. Let's have a look at Berkshire Hathaway. This one having bounced off that support. Again, there'll be buy orders just sitting around this 270, 272 area. And so that's a nice little bullish candle. Break the high of that, see if we hit back up to the top of that range. That's a possibility on that weekly. BP. So again, where these things just fail when they might actually find support that supports that longer term view that we know we're going to have a correction at some point in the future. The question is this the beginning of that larger correction? Or is this the usual kind of correction we have annually before we have the Santa Claus rally? Okay, BP PLC, uptrend on the daily, managing to recover there. We spoke about an inside bullish candle. We did break above the high of that. So far, we are in an uptrend on the daily. So for me, I think it's fair to say that it's going to certainly attempt to continue to push a little bit higher there. So leaning a bit more bullish on BP. This one now on Coca-Cola. I'm expecting this to continue down to these levels, to find those levels first and then potentially bounce off those. It's very fair to say that if other levels on other stocks are bouncing, there's no reason why this couldn't happen as well. There would be buy orders sitting down at these lows. And it would be healthy for it to connect down here before perhaps down towards these old highs and then find some support. So I'll be interested to see if it heads down towards 53.35 and bounces back from that. Exxon will be similar to BP, of course. It's produced that nice little bullish candle. It's got a higher low, higher low, higher high here on the weekly. And so here for me, expected to see if it can push a little bit higher. General Motors, bullish inside monthly candle. It's had a really solid correction. Again, in a bigger correction, I'd love to see it come back down towards these lows, but where it is now is actually not that bad at all. Sufficient. The real question is, can it get back over this level of support resistance, get back across that? If it can, then I would expect it to have a really good free run up to 57.50. If it can't, then I'm expecting it to come back down towards these lows. None of these are really, like, when I talk about these now, I don't see a lot of them at this point immediately as great entry opportunities. I would prefer, for me, it's either there's an existing uptrend and then you're looking to join that uptrend when you have a really nice healthy pullback, or alternatively, if you are in a bigger correction, then you want to wait until the correction is slowing down in itself, and that would be on the monthly chart. You'd start to see that kind of turnaround. And so this is in that in-between phase where we don't know yet if it's part of a bigger correction that's going to start to, in a year's time, we'll look back and go, well, that was really it. Or if this is just part of a healthy weekly correction in the markets, have that room to just keep going. I mean, there's an argument to be said for the markets being able to keep going. JP Morgan Chase, again, it's got to get through this level of resistance. If they start to break above these levels, then I'll be waiting for pullbacks and continuations of those. That's a great Morgan Stanley recovery. Weekly chart looking really good. Nice little bullish candle here, break above the high, continuation there. But we've had a series of red candles here, and this can often be a sign of exhaustion. I mean, so is that when we just continued on. So again, I'm not going to just go, oh, this is definitely it. I think it's safer to err on the side of caution, obviously, but to err on the caution of the side of the bulls first before really being overwhelmed with bearish evidence. Rather than the other way around is being, chicken little, sky is falling, and the market never does that. Okay, so again, we've got an an engulfing candle here. What is wrong with me? I just loaded up on like 2 espresso, so I really should be on fire, but I'm not really seeing that as being the case. And to see if we break the high of this and continue up. So Apple looking all right. Apple's that sort of swing high but also bearish engulfing candle at this point is also still really arguably an indecision candle, and therefore does have that a really nice natural healthy break, would come back down, test these highs for support, and then carry on up. So a continuation to the downside, that's what I would look to see, is actually find some more support in this area, but it has appeared to have set up for that, and so let's see how that goes. So NVIDIA just continuing on its trip. It's pulled back, right back into these old highs, produced a bullish candle in isolation. That is a very bullish signal. Can it break above the 229.70 mark? Okay, can it get past that level of resistance? Let's have a look and see. PayPal holding strong at that level of support. The monthly here, just a hot mess, really. We've got that level of resistance over there. But yeah, push back up, towards these previous highs, not necessarily out of the realm of possibility. Tesla having a really solid recovery, continuing that move to the upside. Let's see if it encounters any resistance where it is coming into these old highs here, which will be the lows here. So this is a level I would pay attention to. I'm just going to mark that over here, and let's see how we do if we break through that. And if we do, then it makes sense we'd start to head up towards old highs. If we fail to do that, then obviously we start to head back down to the most recent lows. Spider, lower highs. Overall, not a clear direction here. Not a clear direction here. This one could go any which way. I'm just going to move on that and just stay away from that. Vanguard has also been a phenomenal performer, although it did drop a lot lower here. So in other words, if you look at this correction here, this correction here, we had quite a strong correction almost back down towards here. Not a longer term sign of strength. That's definitely a very slow shift towards the downside for sure, but it doesn't mean that it doesn't have a few more good moves to the upside in it, but it is certainly starting to struggle. So it's pulled back halfway into the previous week's high. So notice this pullback here is halfway into the previous week, and this would be a perfect area for it to potentially find resistance and continue down. I'd like to see a break above the high and pull back into these old highs here. So a couple of these are really healthy and strong, and I want to see if they are able to push back up and get into the old highs, follow through on the weekly, and try to aim towards the old highs or even past them. The question is, and so the logic, what's going on in my head is that if they fail to do that, if the really best ones here fail to continue much higher, then obviously this again supports the idea of that perhaps being a bigger correction, and we'll see where we are by the end of the week. But the difference is there are times, if I cut back to booming parts in over the last year and last year, where I'm like, no, this is mostly bullish. I'm not really expecting the market to have any big moves to the downside. I'm still in this place now where the market, although it does look a little bit more bullish, and I'm prepared for that. This week am keeping an open mind that there is a possibility the market could find resistance where it wouldn't find resistance, or it could go either way. And so it just means making sure definite stop loss, trading with the trend as much as possible, but also making sure I take profit ahead of major levels. So moving on away from equities of interest and moving on to treasuries, looking at the US 10-year T-note. We've broken through that level of support. We fell lower. No one's buying at this point in time. We have a swing high and a lower high on that monthly basis. And so at this point, any pullbacks into these might present selling opportunities and also continuations to the downside. MACD is starting to look more and more bearish. RSI bearish, both of those bearish momentum and therefore expectations to the downside. Look at Euro bubble, same thing, very bearish. Potentially moves down into these lower highs or back into these areas of support, or perhaps even a little bit further than that. And that also supports the idea of there being, I guess, less volatility in the markets, less fear, because we're not leaning into treasuries. And again, gold not necessarily following through on its bullishness. There's a lot of signs here that show a lack of fear. Okay, that the market is not especially stressed. That actually supports the idea of equities perhaps climbing higher this week, able to actually genuinely recover and push higher. So let's see. We've got the Eurobond also looking nice and bearish, so selling opportunities for me on the treasuries. Let's look at cryptos. So cryptos did actually head a little bit lower, managed to recover and then head a little bit lower. They are struggling at the moment. They're just not necessarily everyone's favorite thing right now. I think everyone's kind of a little bit tired of cryptos for now, having had all the excitement and are managing to recover a little bit, some people from having got in at the highs. And so I think right now it's kind of sitting in the middle, whether we're part of a bigger correction down or not. Overall, I'm not really going to watch them too much this week. I only look at them then if something else happens across the other markets that's a big unexpected move. At the moment, they're just looking like they're just going to tread water for immediately. Obviously, they're a little bit more bullish than bearish, but they're not really strong enough to resume that healthy uptrend. We'll know it when we see it, because it will definitely look that. It's still in a downtrend on the daily. This is now looking obviously at NEO, still in a downtrend. That's a bearish engulfing candle. So that looks like that really wants to head back down to these old highs. Look, don't worry about this. Gold had a similar thing. 2011, it was going through the roof, and nobody thought it would ever come down, and it did, and it stayed down for several years, and now it's kind of trying to push back up towards the old highs. So it's just very simple that cryptos just might not be done with their bigger correction. Okay, it'll be done usually when enough people have got bored of it. And so here we've still got that bearish candle here. And so when we look at Cardano, let's have a look at Ripple. Let's look at Dogecoin. Okay, none of these looking particularly bullish. A lot of them looking like they're going to test further lows this week. And so for trading opportunities, they might well be on breaks and retest of those down to lower levels. I'd like to see a nice stronger recovery, but they are certainly not looking strong at the moment. And therefore, I'm going to exercise immense caution with them just until further notice, because I think they're leaning just a little bit more bearish. And if they're bullish, they don't have a strong bull trend yet. And that's it from me. I want to wish you a fantastic week. And can you believe it will be in October next? And wow, this year is just flying by. Listen, wishing you all the best and look after yourselves and trade and risk manage responsibly.